Tesla is one of the most talked about stocks in the market today. But is the stock a buy, a hold, or a sell? That's the question I'm going to answer in this video, looking across a few financial metrics and using the financial analysis I've conducted on Tesla stock over the past several years. So let's get right into it, looking at revenue first. Tesla has done an incredible job ramping up production, increasing capacity, launching new models, and substantially increasing revenue, especially after 2020 when revenue exploded from around 25 billion all the way up to 94 billion in the most recent trailing 12-month period. Now, I will say that the growth the company's experienced in the last couple of years may be more than usual. Remember, supply chain shortages hurt competitors as production was decreased. So when consumers went out looking to purchase cars, there was fewer models available. Tesla's production was not hurt as much as rivals, and so it was able to sell more of its cars as demand was stable while supply decreased meaningfully. However, now that supply chains are repairing and production is increasing, Tesla's having a harder time selling its cars. You want evidence of that? Look at all of the price cuts that Tesla's having to implement. Now, that's not all a result of competition. Only some of that is. Another factor causing sales to slow down for Tesla is rising interest rates. Most people, when they buy a car, they need to finance. And so with higher interest rates, their monthly payments are increased. And so Tesla chooses to lower its selling price so that the monthly payment is not too high for consumers. And so while that might support sales for a while, it's going to hurt profit margin. Speaking of profit margin, we already see it happening at Tesla. Look at its operating profit margin quarterly. It was increasing very nicely over the years up until recently when all the price cuts started happening. Its operating profitability started falling. It's at 9.62% in the most recent quarter. I would not be surprised if this falls even further in the next quarter and then even more so in the following quarter. These price cuts, there's no telling how much more they will go. It's competition. So when Tesla lowers prices, competitors lower prices too. And so when shoppers are going out to look for cars, all the prices are now relatively similar because Tesla cut prices, their rivals cut prices. And so competitively speaking, Tesla's not in much better shape in terms of price point. However, with profitability, Tesla is the best in class. You will be hard pressed to find an EV company or any car company for that matter. There's only a few that have better profit margins than Tesla, and those that do have better profit margins than Tesla are producing smaller scale. Think of a company like Ferrari, right? Not companies like Ford and GM. Those are way behind Tesla in terms of profit margins. And then the newer startups like Rivian and Neo, those are also way behind Tesla in terms of profit margin. So you could argue that if it's going to be a race to lower prices, Tesla's going to win that war, and I would argue in favor of that as well. However, the outcome of that war will take a very long time because many of these EV companies have got billions of dollars in their war chest, and they could go on losing money for several years before they would throw in the towel and say, okay, Tesla, you win, we're going to back off now. But that would be a lot of pain for so many participants in the industry, Tesla included. The next thing I wanted to look at is free cash flow. And again, you could see how Tesla has done an incredible job demonstrating economies of scale, getting better at what it does over time, right? Free cash flow was relatively flat around 2014. The company made significant investments over the next several years, and free cash flow declined. And then, as the fruits of that labor started to pay off, Tesla's free cash flow has increased substantially, reaching 6 billion in the most recent period. And cash is not so much of a problem for Tesla anymore, whereas before 2021, Tesla was always in need of cash because it was investing billions and billions and billions of dollars in increasing capacity and research and development. And so it was always short on cash. Not anymore. The company is generating strong free cash flow. And so, like I mentioned earlier, if it's going to be a race to the bottom, if there's going to be competition on price, Tesla's in a great position to win that war. It's just that it will be wounded coming out of it regardless. Even if it wins, it will take time because of the strong capitalization of so many competitors, and it'll hurt profit margins, cash flows for everyone, even the winner at the end. Finally, I wanted to look at valuation, and Tesla's trading pretty expensively still, even though it's not at its heights. It used to be even more expensive than this. Tesla's trading at a forward price to earnings of 51. Now, I did say that Tesla is the best in class vehicle manufacturer, right? Not just EV manufacturer, just vehicle manufacturer overall. Tesla is best in class. Like I mentioned, you'd be hard pressed to find a company with better margins, with better cash flow, with better demonstration of economies of scale like Tesla. However, you will also be hard pressed to find a car company that's priced anywhere near the valuation of Tesla. Tesla is by far the most expensive car company in the world in terms of valuation, forward PE, or near the top of the most expensive car companies in the world. Companies like Ford and GM, they're trading at forward PE ratios of less than 10, while Tesla's at 50. And then you might say, well, Tesla's a technology company, so it should trade like a tech valuation, not like a car company valuation. Okay, even if I don't argue against that point, which there is arguments to be made because the vast majority of Tesla's revenue comes from car sales, not from tech sales, and that will likely continue to be the case for the next decade, perhaps. Still, even if you compare it to companies like Microsoft and Apple, they trade at forward price to earnings of around 30. So Tesla is even more expensive than tech companies. So for that reason, if I was to say if Tesla is a buy, sell, or a hold, I would lean more towards saying it's a hold because of the valuation. Only because of the valuation. The company's done an incredible job in performance, but it's just the valuation that concerns me. So I would wait before buying, and if you already own it, I wouldn't suggest selling it because you've probably made a lot of money, and if you sell, you're probably going to take a tax. You're going to have to pay the tax on those gains. So it's not at a point where I would say it's grossly overvalued and you need to sell. It's just at a point where I would say it's really expensive. It's already incorporating all its excellent characteristics into the valuation, in my opinion. So I would just wait for a better entry point before buying Tesla stock. So for that reason, I would rate it a hold. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.